Hi, and welcome to our course on cryptocurrency. When Satoshi Nakamoto launched Bitcoin in 2009, he didn't mean it to be an investment vehicle we see today. He had two clear functional purposes. First, as a currency with a nominal value to let people buy goods or transfer funds without needing a bank, and second, as payments to miners or validators who volunteered computing power to validate those transactions and record them permanently on the blockchain. Essentially, it was a software business with a new way of recording data, paying its staff/miners in its own native coin. And this concept holds true for nearly all major cryptocurrencies that followed. They are all transaction-focused software companies using a blockchain to record transactions with a coin that pays validators and transfers value. So while many see crypto as a speculative investment activity, they don't realize there's a normal day-to-day business underlying each crypto coin. Now here's what most people miss. Cryptocurrencies aren't magical internet money. They're software companies with a twist. Take Ethereum for instance. It's a smart contract platform. Think of it as decentralized legal and software infrastructure, almost like Amazon Web Services meets a legal system. It has real usage, and in 2024 it generated about 2.5 billion in revenue for its underlying business. Then you have systems like XRP Ripple, which is an international funds transfer system trying to compete with giants like Swift, with its own revenue in billions. Solana, another coin, is a high-speed network, kind of like high-frequency trading infrastructure, and in 2024 it earned $750 million. Polkadot is software that connects different blockchains together, like a telecom backbone, and in 2024 it had revenue of just $900,000. And finally, Avalanche is a faster version of Bitcoin. Now these are actual software companies, but their earnings are a tiny fraction of their valuation. So consider their peers, like Google, for example. Its stock is valued at about 5 times its revenue. Nvidia is a high growth leader and is valued around 27 times its revenue. But look at crypto. Ethereum trades at 200 times its revenue, and smaller players like Avalanche can hit staggering 1,500 times its revenue as a valuation. So it makes no logical sense as a traditional business concept. So if the business fundamentals are so out of whack, what is driving the value? And the answer lies in an anecdote and a simple economic principle. Back in 2010, a man named Laszlo Hanyecz paid 10,000 Bitcoin for 2 pizzas, about $30. And today that is worth about $900 million. So how did that happen? And around 2011, people realized that Bitcoin had a fixed supply. There are only ever going to be 21 million Bitcoins in existence. So if adoption of this scarce asset were to increase, its value also had to increase. And this scarcity, combined with the potential for utility, quickly turned the coin from a simple payment mechanism into a highly speculative asset. And this speculation is why we see those massive revenue multiples, and it's also exactly why crypto can crash so extensively in bear markets. But there are also business use cases for crypto, such as ownership registrations for property, fine art, aircraft leasing. They're all been currently developed. And anti-money laundering, AML, is also a use case. And you can read a paper that I wrote a few years ago on the development of Blockcoin and crypto for the AML industry. You can download that from my LinkedIn page. So now that you understand how uncertain all of this is, do you still want to invest? So if the answer is yes, that's fine, but you really have to go about investing in crypto with a real risk management mindset. So for example, your crypto holdings should only be about 1 to 5% of your overall portfolio. And you also need to be prepared for a very volatile investment journey with a long time horizon in order to reduce risk. So what should you have in your portfolio? As we mentioned earlier, cryptocurrencies are the coin element of an underlying software company, and in most cases, that software focuses on enabling transactions. Bitcoin, for example, is a straight transaction focus, whereas Ethereum is a conditional transaction focus. Many other coins focus on layering their services on top of Bitcoin or Ethereum, or running an infrastructure or support service alongside Bitcoin or Ethereum. So the key players in the industry are Bitcoin and Ethereum, with many of the rest of the coins as copycat or spin-off coins. Other significant coins that have a real underlying business that's worth considering are XRP Ripple, which is a $144 billion market cap, and as we mentioned in the previous slide, is a cross-border payment network competing with SWIFT. Tether is a $140 billion market cap. It is a leading stablecoin pegged to the US dollar. Now, a stablecoin is a coin that is backed by a real currency. So one stablecoin, one Tether would be equal to $1. So that's why their value tends to be quite stable. Solana, $70 billion market cap. It's a high-performance blockchain for diversified finance and NFTs. And another approach that's worth considering is buying some exchange-traded funds or EFTs that focus on cryptocurrencies or blockchain. Given that the major investment management firms who issue these EFTs have carried out extensive research into these underlying companies that they include in their EFT basket. So that is certainly worth considering, and we have a few here on the screen that you can follow up on. So these are a good option if you don't want to open an account with a crypto platform and buy crypto directly. You can buy it indirectly through an EFT. Another aspect for your crypto portfolio should be blockchain related investments. So blockchain is the database on which all of these cryptocurrencies sit. So these varied holdings include coin exchanges, companies that are finding business use cases for cryptocurrencies, such as recording fine art ownership or house deeds or aircraft leasing, as we mentioned before, all within blockchain structures. And as crypto becomes more mainstream, these companies should benefit more and more. Now, in this slide, we're putting together our sample portfolio, and at the top there we have Bitcoin and Ethereum with 35 and 25% respectively. Now, these are weightings that really are put together based on ideally the market cap of each coin. But if that were the case, Bitcoin and Ethereum would really take up about 90% of your entire portfolio. So we're trying to sort of ease that down a little bit. So reducing the holding of Bitcoin and Ethereum and spreading it across the other coins then. So we have XRP with 15%, Binance Coin, which is a sort of native coin to the Binance exchange. Solana, we've mentioned before, Chainlink, Uniswap, Cardano, and Tron. These are all relatively good coins. They're probably, if you were to list a top 10 of coins, they'd be in there with those. And then we're going to finish out our portfolio with some ETFs. So we've set aside about 10 to 15% of our portfolio, of our crypto portfolio, which in itself represents up to maybe 5% of our overall portfolio. And we've left aside about 10 to 15% of that to cover ETFs in order to spread around the load between blockchain technology, crypto technology, and direct cryptocurrencies themselves. So that gives us a nice overall balance between coins, ETFs, blockchain, and we should capture most of what's going on in the crypto industry with that portfolio. So when you're selecting your crypto coins, there are certain things you need to consider, because there's an awful lot of coins that are built purely on speculation with no real underlying business to them. So first of all, you have to look and see, well, what is the problem that the cryptocurrency is trying to solve? As we've mentioned, these are actual businesses underlying these coins. So the business has a business case where it's trying to solve a particular problem. So we need to understand what that is in order to know that it's not just pure speculation. So how does the business make money? How do the token holders benefit? What's the competition that this cryptocurrency is facing, and could that competition simply wipe it out, or could a change and an improvement in technology simply wipe out this coin? Because as we know from other investing in technology, a new generation of technology can appear and simply overnight wipe out the old generation of technology. So you just have to make sure that what your the criteria you use to select a coin takes that into account. So trying to research coins can be a bit tricky because the traditional websites that you would go to don't necessarily cover these coins. But here are two links that you can follow. Messari.io and Diffalama.com are two interesting websites that give a good comprehensive overview of coins, and a much deeper dive into what the underlying business is involved in, how much business it's doing, and really how much of a business case there is to invest in. So those two websites are worth having a look at to do some research. Now we move on to the area of where to buy and hold your crypto coins. So for exchanges, the crypto exchanges, if you live in Ireland, probably one of the best ones is Coinbase. It's one of the most regulated, and it's easy for beginners to navigate around the platform. However, Coinbase was recently fined €21 million by the Central Bank of Ireland for poor compliance with AML regulations. And alternatives then would be Kraken and Gemini, which are very solid alternatives. Binance, on the other hand, is one of the largest globally, but too has had regulatory concerns in various jurisdictions. The main thing to find when you're looking at a platform is to see that it's very well capitalized and that it's regulated by one of the normal regulated agencies, be it the Central Bank of Ireland or regulated in the UK or whatever its country is, that it's properly regulated, and it should state that on its website. And if you want to verify that, you can go to the regulator's website and you can check it out. But for small holdings, if you hold 10,000 euros or less, it's probably worth just keeping that on the platform, so long as it's a reputable platform. But for larger investments, you should get a hardware wallet so you can take the key offline. So wallets such as Ledger or Trezor hold your crypto keys securely offline. So when you buy a coin, you get a key, which is a long code of numbers and letters, and that code essentially is verification that that is your coin. So they have a saying in crypto: "No key, no coin." So if you don't have the keys, well then you're not going to get the coins. If they go onto your platform, well, the platform will hold onto your keys, and then you'll be able to come back and get them whenever you want. But if you want to take them offline, well then the offline Ledger or Trezor hardware wallet, they'll hold your keys securely. So now some final thoughts on buying and holding crypto, a good portfolio on cryptocurrencies. First of all, you need to set yourself some realistic expectations. The best case would be that crypto becomes mainstream and your portfolio grows maybe 10 times, 50 times, something like that. The base case would be that crypto stays niche and maybe your portfolio might grow 2 to 5 times over 5 to 10 years. The worst case would be there might be a regulatory crackdown or some other major failure sends crypto to almost zero and people just walk away from the whole idea. So your goal isn't to hit the best case. Your goal is to survive the worst case while positioning for the base case and possibly the best case. So you really have to treat investing in crypto like in any other investment. So that means you do your research and you invest in crypto with real underlying value. And that should help during major drawdown periods where the value should fall less than other coins. And remember that most crypto investors have no idea what they own. They're there pure speculators following the crowd. So by actually understanding these networks and how they earn and how they grow and compete, you'll have a serious edge over others.